any questions, please use the QA function at the bottom of your screen, and we'll get to the questions at the end of our presentations. Thank you. We'll get started in about a minute. Good morning, everyone, and thank you for joining this webinar. My name is Renee Manley, and I'm a senior advisor at the Capital Markets Center. I'll be moderating today's discussion covering the Vote No campaign against the re-elections of Tesla directors Kimball Musk and James Murdoch, and against the ratification of the 2018 option award. We're joined today by the New York City Comptroller, Brad Lander, Maryland Comptroller, Brooke Lehrman, who will be joining us shortly, Ivan Fishberg, the Chief Sustainability Officer at Amalgamated Bank, and Tejal Patel, the Executive Director of the SOC Investment Group. This year's annual meeting at Tesla brings investors the opportunity to address long-standing issues at the company. There's been ample evidence presented that Tesla's board lacks the sufficient independence and is overly beholden to the CEO, jeopardizing long-term shareholder value. This is best exemplified through the board's failure to ensure Tesla has a full-time CEO and its decision to re-up the extravagant 2018 option award unaltered to this year's proxy, despite it being rescinded in the Delaware Chancery Court. Our speakers will be delving into these issues further and will be available to answer questions time permitting. Our first speaker of the day, I'm so excited to introduce the New York City Comptroller, Brad Lander, whose office manages over $271 billion in assets across the 5 New York City retirement systems, putting it in the top 5 largest funds in North America. Comptroller Lander, thank you for joining us.
Thank you so much, Renee. Thank you for the invitation. Thank you to everyone who's joining. I'm New York City Comptroller Brad Lander, and we're the investment advisor and custodian for the 5 New York City pension funds, which is the retirement security of teachers and firefighters and public hospital nurses and cops and school crossing guards. It's our job to make sure that their retirement security is protected for the long term. As you say, we've got over $270 billion of assets under management. We're sizable shareholders in Tesla. We have those 5 funds as of April 30th had 3.4 million shares of Tesla worth over $627 million. And we share the long-term concerns that you addressed about the failures of the board to provide the independent governance on behalf of shareholders that they're legally obligated to provide. That's why we signed on to the public letter that folks have seen on May 20th with a great crew of other investors, some of whom are here, SOC, Academic or Pension, United Church Funds, and of course, Amalgamated, articulating our reasons for voting against the re-election of Kimball Musk and James Murdoch and against the ratification of this outrageously large and insufficiently governed pay package valued at up to $56 billion by a captive board. And just for a sense of kind of order of magnitude, there was some research done that looked at average pay of comparably sized companies' CEOs, and it was in the double-digit millions of dollars a year. So we're really talking about something stratospheric, but the core issues here are of independent shareholder governance, and we've raised them in the past. We and other institutional investors in 2017, 2018, 2023 urged the board to add independent directors to provide the kind of independent governance on behalf of shareholders that is required. Unfortunately, rather than move in that direction and add independent shareholders, things actually went in the opposite direction. 2 independent shareholders left the board because of dissatisfaction of how controlled the board was, and folks who have been added who are far too close to Musk and to management. And we've just seen this over and over and over again. And then what was really quite extraordinary is that the Delaware Chancery Court made clear that they agree that this is a captive board. Essentially, they talk about it as a board that's captured. I say it's being run by like a family business, even though it's a publicly traded company, but it is very rare for a court to find that the board failed to meet its independent duties. And that's what the Delaware court found, that there was a flawed process in 2018, that the board did not negotiate with Musk, that they did not conduct a benchmarking analysis, and that it validated all the concerns that we and others had been raising. And then to make matters worse, after that court finding, rather than take it seriously, the board has conducted even more governance failures, assigning this to a single director special committee. A committee of one is not a committee. And of course, it just further validates the concern. So I do want to make clear, this vote is not a referendum on Elon Musk as CEO. Obviously, he is a visionary who, whose role in Tesla in the past has been critical, but there must be independent shareholder governance that makes sure that pay packages are reasonable. This pay package is not reasonable. Musk's interests are already aligned with growth in the company. His stake is worth $73 billion. So he's already got interest perfectly well aligned with the company. What Tesla needs is a full-time, focused CEO focused on growing the company and producing good shareholder returns, not allowing for distraction or chasing shiny new objects or doing other things than paying attention to what a board is supposed to make sure management is doing. And that just has not happened here. I just want to close with one word. A lot of folks on the call, like us, are investors and are deciding how to vote. And I think you've seen from a lot of the folks who advise shareholders, a lot of reasons why the votes we have taken are the wise one. But I do want to say something to folks who might follow this and aren't, shareholders, because this matters more broadly. When billionaires are allowed to flout the rules, normal people suffer. The rules here for independent shareholder governance are to make sure that folks like our retirees, like teachers and firefighters and public hospital nurses, can have their money invested in the stock market and that they'll be protected just as well as other shareholders will. And that only works when the rules are followed, when court rulings are upheld, when independent shareholder governance is meaningful, and when a billionaire can't just have his brother and his besties be the ones that decide what rules they'll follow, what courts they'll listen to, and what rules they'll abide by. So there's a critical decision to make here for Tesla shareholders, and to me, it's pretty clear. There's also a critical set of issues involving the way that independent shareholder governance governs our capital markets that is important as a precedent and much more broadly. Thank you so much.
Thank you so much, Comptroller Lander. We'll be hearing now from Comptroller Lehrman, who is here in her capacity as the elected state comptroller of the state of Maryland. Comptroller Lehrman, thank you for taking your time to join us today. And can you please tell us a bit about your concerns with Tesla?
Yep, absolutely. Good morning, everybody. It's great to be here with all of you. It's great to see my friend and colleague, our New York City Comptroller Lander. Thank you, Brad, for all of your leadership on this and so many other issues. Naya, great to see you again. Thank you so much for pulling us together. To everybody who organized this, really appreciate and want to extend my appreciation to the hundreds of trustees and Tesla investors who reached out and asked that we convene this briefing and who are joining us today. Again, thank you for that disclaimer. I am speaking not on behalf of the Maryland State Retirement and Pension System, of which I'm vice chair, but as the state elected comptroller for Maryland. And like many people on this call who serve on pension fund boards, we have a delineated process for investment decisions. And I know that our corporate governance committee is looking at this along with ISS before we decide how we will be voting. So delighted to be here with all of you today, just to lend my support to what we just heard from Comptroller Lander, making the pledge, which I trust all of you are making, to take all of the information that we're gathering today, to conduct a vigorous due diligence process, and to ensure that all of our fellow trustees and our consultants are fully informed and prepared to do what's right. And I liked where Comptroller landed to the end on, really respecting the rules, making sure that we are being good stewards as we continue to dig into some of what we have seen happen at Tesla and some of what we saw happen through the court process in Delaware as well. So I want to draw attention first to a section of the investor letter sent to Tesla from Amalgamated Bank and other investors on this call that highlights really the financial risk that's posed by Tesla's poor track record of mismanaging their own workforce. It's really this risk piece that so many of us as trustees must keep in mind to be good fiduciaries. I hope that, all investors on this call will pay attention to these concerns and really the failure of Tesla's board to resolve poor human capital management practices. I will say, as a former attorney who represented workers, this can lead to so many difficult downfalls and pitfalls for companies themselves. And it is a true financial risk when we do not have boards and do not have CEOs and companies that are investing in good, high quality human capital management practices. For example, any investor in Tesla should be worried by the April 1st Reuters headline. I think it read, "Would-be Tesla buyers snub company as Musk's reputation dips." There's another Reuters one from February that read, quote, "Tesla must face race bias class action by 6,000 Black US workers," right? These headlines really represent huge challenges in the company itself. And those challenges represent risk for you and for me as investors. I won't go through all the other headlines for the sake of brevity. Suffice to say that for Tesla to succeed, we need a management team that is on the ball, that is solely focused on running this company, and that is better equipped to turn around these problems. We need an independent board that's holding management accountable for its failures to resolve human capital management failures. And an effective board member needs to make sure that there's somebody who's standing up to the CEO when necessary. There's so much more that we can all say about the need for accountability and investor engagement at Tesla, but in the interest of time, I think that Comptroller Lander really keyed in on a lot of what the Delaware Court of Chancery also noted, that there's, ample evidence that the board is overly beholden to the CEO, and really noted that Tesla's performance is floundering and revenue growth has been volatile. Its reputation is declining and reports of poor working conditions continue to emerge. We need a full-time CEO who's adequately focused on the company. So thank you for being here today. I will pause now and hand it over to Renee Manley, who will introduce our next speaker. I really appreciate your engagement in ensuring that we're protecting the assets of our shareholders and of all of our pensioners. So thank you.
Thank you, Comptroller Learman. Next, we'll be hearing from Ivan Fishberg. He is the Chief Sustainability Officer at Amalgamated Bank, and he will be specifically discussing Tesla's board independence issues. So thank you, Ivan.
Thank you, Renee. As you said, I am the Chief Sustainability Officer here at Amalgamated. We were founded more than 100 years ago by garment workers in New York City, and we still serve the labor community through both Treasury and investment management services nationally. And we hold about 600,000 shares of Tesla stock on behalf of the funds that we manage. First, thank you to Comptroller Lander and Comptroller Learman for leading on this effort and for your thoughtful stewardship of New York City and Maryland's finances, and also the interests of the many beneficiaries and pension funds that you serve. Also, I think Tejal, thank you to you and the SOC team for all of your important work on behalf of Tesla investors here and in organizing this briefing. Much appreciated. Amalgamated and our Longview family of funds have been longtime investors in Tesla, and for several years we've sought, I think, as Brad you mentioned, to engage the company on issues relating to workplace equity and governance. And over the last 3 years, there's no doubt that Tesla has faced a more challenging external and internal environment. These headwinds include greater competition globally for Tesla's core product, slow and chaotic product development, product delivery delays that are almost meme-worthy, labor disputes, and increasingly a distracted CEO. I think is up now to 6 companies that he's running. It is during these times that the governance of a company and the independence of its board is its greatest value and importance. And unfortunately, the Tesla board has been failing to meet a reasonable test for such independence. Over the last 5 years, 2 board members have left the company reportedly due to concerns over CEO behavior and the board's level of deference to the CEO. Recently departed board members are Linda Rice and Hiromichi Mizuno. On the current proxy, board members James Murdoch and Kimball Musk have been renominated and we have called for a no vote on their reelection. However, the concerns spread beyond those 2 board members and to the problematic culture within the board and its approach to and the approach of its nominating committee. 3 of the current board members are longtime personal friends of Mr. Musk, and 1 is a family member. Board members James Murdoch, Ira Ehrenpreis, and Joe Gebbia all have long-term and widely reported personal bonds that predate their joining the Tesla board. Elon Musk's brother Kimball has a long-standing personal and professional relationship with several other board members beyond Elon, outside of the context for their roles in the Tesla board. There are many published reports related to the personal relationships and histories of these board members, many of which were cited in the Delaware court decision overturning the 2018 pay package. Board member Joseph Gebbia, who was nominated to the board 3.5 years ago as an independent board member, filling that standard for the board, had to step down recently from the 2-person special committee assigned to the task of reviewing CEO compensation and the reincorporation into Texas because of a self-declared lack of independence, leaving this, as Comptroller Lander said, a 1-person committee, which really isn't a committee. So it's very clear evidence that the nominating committee itself is not clear on standards of independence in advancing board positions of the CEO's friends and family. The close relationships that they have extend also to their business dealings. 4 board members, Straubel, Ehrenpreis, Murdoch, and Kimball Musk, have interwoven business dealings and related person transactions with the CEO and to each other. Focusing on Murdoch and Kimball Musk, who are up for re-election in the current proxy, Murdoch has invested in SpaceX, both personally and through his investment management firm, where Kimball served on the board for 20 years. Elon and Kimball have a long history of business ventures together, spanning back to 1995, and Kimball has been close to Director Ehrenpreis since the 1990s. This was all very well documented during the Tornetta decision. The overwhelming personal and financial entanglement has clearly come between the board and its responsibilities for independence and for ensuring the interests of long-term investors. The board has overseen the declining public reputation of the company, the CEO's continued controversial posts on social media, run-ins with regulators, public reports and CEO acknowledged use of drug use, recent erratic decision-making on products and staffing. The board is responsible and should be accountable to investors and organizing itself into a body that demonstrates true independence and true dedication to the long-term interests of investors, and it is failing in that regard. Accordingly, we believe that there is no prudent option but to vote against the renomination of board members James Murdoch and Kimball Musk. With that, I will thank you and turn it back over to Renee.
Thank you for that amazing analysis. I'm going to bring up Tejal Patel, the Executive Director of the SOC Investment Group, and she will be discussing the ratification of the 2018 pay plan. So thank you, Tejal.
Thanks, Renee. So as Renee mentioned, I'm going to be talking about the ratification of the 2018 pay plan. If you're a long-term shareholder, you probably recall that back in 2018, Tesla asked its investors to approve an options package for CEO Musk. It was then valued at $56 billion. Even at that time, it was seen as unprecedented. Back in 2018, there were numerous concerns raised in terms of the sheer size and magnitude of the award, the dilutive impact it could have on shareholders, and issues related to the structure of the pay package. And just by way of background, and this will come up in a minute, the 2018 awards design was actually fairly similar to an earlier grant for $78 million in performance stock options that was awarded to CEO Musk back in 2012. So investors are now reviewing this 2018 award again with the benefit of hindsight, but also with the findings of the Delaware Chancery Court case that everybody's mentioned, Tornetta. And that case identified 3 primary deficiencies in the original 2018 pay package. So the first was that the directors that approved the plan were not independent, and therefore they were unable to act in the best interests of Tesla investors. That the facts of the pay plan as they were presented to investors were misleading. And third, that the board failed to negotiate the pay package with Elon Musk, which was a breach of their fiduciary duty to Tesla investors. So if we fast forward to today, what's being asked of investors is, on one hand, we're being asked to treat this as though this is sort of a new look, if you will, because Tesla created this special committee of independent directors to determine whether the pay package should be ratified. But we're also being asked to evaluate the exact same pay package, good and bad, that existed back in 2018. So if you look at this special committee process, as Comptroller Lander pointed out, it's been comprised of a single director, the only one who the board seemed to think was truly independent. It was a rushed process, and it doesn't address the original concerns with the pay package, nor does it address most of the concerns that were laid out by the Delaware Chancery Court. In fact, the proxy statement this year actually says that the special committee didn't hire any new consultants, and they didn't reevaluate the substance of the pay package. In fact, there was never a benchmarking analysis that's pretty standard in these instances that was conducted on this particular pay package. So the original issue that the board didn't negotiate with CEO Musk, which is related to the breach of fiduciary duty, that still stands, right? Shifting gears a little, there's also this issue that investors are being presented with a bit of a false choice, right? Despite having the opportunity to do so, the board hasn't provided investors with an option of a forward-looking pay plan to help refocus its CEO, or why some alternative plan would have been suitable. And as requests in 2012 and 2018 kind of demonstrate, it's almost certain that even if this pay package is approved, Tesla is going to return to shareholders and ask for more compensation in the near future to retain CEO Musk. In fact, he confirmed recently that either investors give him 25% or he's not going to build the AI and robotic products that are needed for Tesla. If this ratification happens and they re-grant the options, according to the company, he's going to own about 20.5% of Tesla stock. So we're almost certain that that's not going to get him, obviously, to 25%, which means they're going to have to come back for another shareholder vote asking for more. Just in closing, in recent weeks, Tesla has really tried to hammer home this issue of fairness, that Musk did the work, he met his metrics, he's not getting paid as a result of this Delaware court decision. I think what needs to happen is we need to take a step back and really think about the purpose of the pay package, right? Which was to, and these are the company's words, incentivize and motivate CEO Musk to devote his time and energy to Tesla, given his multiple other time commitments, which is even more now than it was back in 2018. He was then and is now a significant investor in Tesla, so his interests should be aligned. The sheer magnitude of the pay package is unnecessary. Moreover, I think with the benefit of hindsight, I think that we can see that the 2018 pay package really did nothing to focus Elon Musk on Tesla. If anything, it unfortunately enabled him to pursue even more outside business opportunities that ended up being funded by the sale of Tesla stock. And irrelevant of whether you believe that the pay package helped promote Tesla's growth, if we want to talk about fairness, we don't believe it's fair to investors that the premise of the original plan was misleading and it wasn't properly vetted by the board. And with that, I'm going to stop so that we have enough time for a few minutes of questions. So Renee, back to you.
Thank you so much, Tejal, and thank you to all of our speakers. Now we have a few minutes for some questions to our panelists. We're also being joined by Michael Garland, Assistant Controller for Corporate Governance and Responsible Investment from New York City, and Rich Clayton, Research Director from the SOC Investment Group. And they will discuss any governance or performance-related questions the audience may have at this time. Okay, I am. Um, so there's a question about the litigation. The AGM is a key moment for shareholders to express their discontent throughout the year. Do you plan to have a collaborative engagement with other investors? Do you think that the board directors could be sued for not respecting their fiduciary duty? So this one actually was directed to Ivan, but Rich or Mike Garland, of course, should weigh in as appropriate.
Sure, I'm happy to jump in there. I think we have a group of letters that have written to the Chair Denholm and the board several times. There's been efforts through various shareholder resolutions that cover all manner of workplace issues. So there's a track record of investors working together in a coordinated way to protect their interests with respect to the company. And so I think that work will clearly continue, and there'll be a big opportunity, I think, for a stock take after this AGM to look at the results of both the pay package vote, the relocation to Texas, the board member votes, and others to kind of understand where things sit, and hopefully, I think more importantly, there will be a reaction from the company that starts to respond to the many issues that have been raised, not just by investors, but also by the court.
And
I was
go
going
ahead.
to just pop in real quick about the question on litigation. I think when it comes to the ratification of the pay plan in particular, that is a unprecedented move. As far as I know, this hasn't happened before. It's opening up a lot of questions under Delaware law, whether this is even permissible under the statutory authority that they're trying to do this under. And I think it raises the question, can you even have a ratification of a breach of fiduciary duty, right? Because that's what this is about at the end of the day. That's what Tornetta kind of decided. And so by requesting that shareholders ratify the pay package, they're really opening up more uncertainty than if they had proposed something anew that had been evaluated appropriately with consultants, et cetera, and vetted appropriately.
Thank you. This is another question. How do you respond to Tesla's argument that it's actually protecting shareholder democracy by putting the 2018 pay vote back on the ballot?
This isn't a performance question, but I'm happy to step in and respond. I would just say that democracy is not fundamentally about elections and voting. It's fundamentally about accountability. And a key part of accountability is that when the public is making decisions, they've got the information they need, and that's straightforward, honest information, that it's not being manipulated in a way that would direct them toward a certain outcome. I think what the court decision in the Tornetta case clearly demonstrated was that the shareholders in 2018 were not being given the straight story by the Tesla board, either about the process through which this pay plan was adopted or about any plausible basis for adopting the pay plan, given the motivations of the company and the desire to align Musk with Tesla shareholders going forward, both in the sense that it wasn't clear that any equity grants at that time were necessary, that it wasn't clear that equity grants on this scale were necessary, but also in retrospect, it's quite clear that, as Tejal pointed out earlier, this doesn't seem to have had the effect of aligning him or causing him to focus any more single-mindedly on Tesla than he ever had before. If anything, Elon Musk, over the period of time between the adoption of this option plan in 2018 and the decision earlier this year by the Delaware court, he has been at least as distracted as he ever has been by other opportunities, by other investments, particularly by the Twitter acquisition, but a whole bunch more. So I think the shareholder democracy argument in this case is really a canard. The board has now twice failed to present shareholders with a transparent and fully honest description of what it did and what it and why it is that shareholders are being asked to vote in favor of this plan. And I believe that shareholder democracy was actually being upheld in the Delaware decision rather than being defied.
Before we leave, we're gonna take one more question. While Tesla's growth has gone down in the last few years, over the long term, it's been steady, achieving milestones that most investors didn't even think were feasible. Shouldn't long-term investors really be looking at the last 5 to 10 years of growth rather than the last 3?
I would say we absolutely agree that you want to look at the long term for growth. That having been said, you also want to pay attention to what's actually happening, right? Because it may be that things aren't just slow and steady in one direction. There may have been a turning point. And I think if we're looking at Tesla, there's some basis for concern that we're seeing, or we have seen over the course of the last year, something of a turning point. Clearly, the company is not on the same trajectory it was or appeared to be at the beginning of 2022. It's not growing at 50 to 80% a year anymore. And therefore, there are concerns, and there are reasonable concerns about how the company is going to adapt to new circumstances and ensure that it's able to grow presumably at a much lower rate, but still profitably grow on a consistent basis going forward. And we believe that none of what the management and the board of directors is putting before shareholders this year facilitates that steady, consistent growth into the future. It's much too retrospective. It's much too focused on the past. It's much too petty. None of this really amounts to what a long-term investor would want to see from a board of directors.
Thank you for that. Unfortunately, I know you all are riveted by this discussion, but that's all the time we have today. Just a reminder that a recording of this webinar will be available shortly. I want to personally thank all of our panelists and participants for joining us today for this very thought-provoking conversation. Enjoy the rest of your day, and you'll be hearing more about Tesla, I'm sure. Goodbye.